The initial public offer of Cyient DLM Limited, a subsidiary of Cyient Limited, has opened for subscription. Today, the price band for the offer has been fixed at 250 to 265 rupees per share. Remember, the Electronic Manufacturing Services and Solutions Company is planning to raise 592 crore rupees via public issue of 2.23 crore equity shares at the upper end of the price band. Now, the offer comprises only of a fresh issue, and hence all the funds, barring just the issue expenses, will be received by the company Cyient DLM. Now, the company has already reserved about 15 crore worth of shares for its employees. Eligible employees will also get these shares at a discount of 15 rupees per share to the final issue price. Remember, prior to the filing of RHP with the Register of Companies, the company also had mopped up about 108 crores via private placement or pre-IPO placement, as it is called. And along with this, the total funds raised by the company have been about 700 crore rupees. Now, Cyient DLM will utilize the proceeds from this issue for incremental working capital requirements. That's 291 crore rupees, and capital expenditure about 44 crore rupees will go into that. Repaying of certain debts is also on the company's radar, so about 160 crore rupees of funds will be used for that purpose. And inorganic growth opportunities and acquisitions could also be seen, wherein 70 crore rupees could be used, and these are the other objectives of the IPO. Now, investors here can apply for a minimum of 56 equity shares and then in multiples of these 56 shares thereafter. Remember, the retail investors can invest a minimum of 14,840 rupees for one lot and a maximum of 1,92,920 rupees for 13 lots, that is. Remember that up to 75% of the offer size is already reserved for the qualified institutional buyers, 15% for high net worth individuals and non-institutional investors, and the rest for retail investors. Now, Cyient DLM, which compares itself with the listed companies like Sima SGS Technologies, Keynes Technologies India and DCX Systems, has asked for a market cap of 2,100 crore rupees, which is lower than that of its peers as well. So that's one advantage that investors can look at. Now, talking of the financial metrics of the company, Cyient DLM continues to see double-digit growth in the top line, but there was some weakness in the profitability and the operating performance. Remember, the net profit for the year FY23 fell 20% to 31.7 crore rupees, but the revenue did increase by 15.5% to about 832 crore rupees, and that's as compared to the previous fiscal. Now, at the operating level, the EBITDA also rose by about 4.5% to 87.8 crores, but the EBITDA margins did drop 111 basis points to 10.55% in FY23. Now, there is a robust order book that the company boasts of about 2,432 crore rupees as of March 2023, which has been increasing significantly from about 1,200 odd crore rupees that was seen in the previous fiscal year, that is FY22. So, should you really go ahead and subscribe to this IPO? Well, we've seen that Geojit Financial Services, Canara Bank Securities, Choice Broking, Swastika Investmart have all given a subscribe rating to the company, and high entry barriers for competitors due to the technical expertise that is needed in the area that the company works in are key moats that the investors can definitely look to buy. Robust and sector-leading order book with marquee customers is also something that adds on to the advantage for the company. Parentage of the promoter, that is Cyient Limited, has a long history of industry experts. Promoter Cyient has 92.84% stake in the company, while Amansa Investments, that's owned by investor Akash Prakash, has the rest of the funds right here, or the stake right here. Now, as a key risk also that investors must note before applying for this IPO is that Cyient DLM's top 10 customers really constitute 91.08% of the total revenues for the year ended March 2023. And Cyient DLM really depends on third-party suppliers for raw materials and components, which are on a purchase order basis and not for a long-term contract. And this could make the company susceptible to costs or supply shocks that could end up going forward from here. So these are the key things that you should note before you go ahead and take that decision, but must speak to your financial advisor before taking the step of investing in this IPO.
If you like the video, do like, comment, share and subscribe.